End of the day, we're helping people buy houses. So it doesn't matter about egos in the middle, how much commission am I going to get, all this stuff. It does not matter. It's about the house being bought. Anytime someone even mentions or lets slip that they've got other brokers working on the same deal, I'm always like, okay, cool, I'll take a step back. There's no point having two brokers on board. We're better than solicitors, come on. We communicate. When the first question is fees, you know where it's going. Yeah. Are you whole of market? It means nothing. Fill it in yourself, honestly, because just lazy.
Hi everybody and welcome to another episode of Property People. Today I am delighted to be joined by Mr. Shazad Ahmed. How are you today?
Sam, I'm great. How are you?
Very, very good. Quick introduction, Shazad Ahmed, aka Where's Shaz, aka the Property Finance Hero. Shaz, you've been in the property finance industry since 2010, starting out as a mortgage specialist at Barclays for 7 years. Since then, you've had various roles until your most recent one, which is starting your own brokerage, Elan Property Finance. Congratulations on that. I know that you're incredibly active as well on socials and becoming somewhat of an online celebrity. So it would be good to find out a little bit more about your story and insights into the property finance industry.
Absolutely. No, let's go through what you want. Thanks for that intro.
Yeah, yes, absolutely.
Covers everything.
I didn't do all the hard work to get you that intro. That was all you. So where I like to start, though, always is who were you at school? What type of person were you? And property finance, is that something that you always thought that you wanted to be when you were 7 years old?
Absolutely not. So in school, I was always a good student. Like, I was set one for everything. Did they have sets in England? I'm from Wales.
Yes, we did. Sets, yes.
Yeah,
we had top, middle, or bottom, or numbers, yeah.
Exactly. So set one for everything apart from science. I was terrible at science. I had a U in science. Set one for everything, good at studies, but really no real direction. Mum and dad were like solicitor, lawyer, accountant. Those were the paths. But in uni, I did media studies, media production, which was a waste of a degree, really. Didn't really enjoy uni. But yeah, no, finance wasn't really an interest of mine. I kind of lucked into it. I've worked, before Barclays, I was working for Lloyds Bank, and that was just in a call center, in a sales environment, and I really enjoyed that. I think sales has been a big part of what I do and what I still do now. Lloyds kind of hit the ceiling, really, of where you could get financially and just in job role satisfaction. Then Barclays came about, and they paid for the CMAP. They made us redundant eventually, which was okay, but they moved all the jobs to Liverpool, not even offshore.
Right. Well, they made you redundant. How many years were you there? What year was that?
I was there for like 4 years.
But what year was it that you got made redundant?
It would have been something like 2018, maybe 2017.
2018.
Yeah.
What was the reason, do you think, behind that? That they were like.
So the redundancy, I think. Well, they were cost cutting. And what happens is you see these patterns and red flags is when they ask people to go and train other call centers, eventually it means they're going to combine and get rid of one. So yeah, just cost cutting, no real reason. We were doing well as a call center. Right. I think they didn't own that building as well, so it was rented and leased.
Okay.
So again, costs. Made us redundant, 6-month gardening leave. I had no plans. I was like, what am I going to do? I wasn't worried, but didn't really care. I was just like mundane. It was mundane reality, really. What you missed out is I set up a burger business.
You know what? I did see that, actually.
What, you thought it wasn't true? You're like, this guy can't have had a burger business.
Yeah, so what is this burger business all about?
So, my cousin, his business is our takeaways and restaurants, right?
Right.
So that's his thing. Whilst I had nothing to do, I was on gardening leave, I had a bit of money as well. And I'm always looking for ideas. I'm an ideas person. I don't want to work in a restaurant, but I'm an ideas person. And I was like, hey, listen, where we are in Newport in South Wales, there's no halal burger restaurants. Like, there's a gap in the market. I love a burger. Let's do it. And he was like, okay, fine. You put some money in. I'll put some money in. Another business partner put some money in. But because you're doing nothing, you're going to work in the place every day. I was like, okay, fine. I'm doing nothing. So why not?
So you're going to work actually flipping the burgers yourself?
Or be front of house or something. But you're going to be there. You're going to be the working partner, right?
Yeah, sure.
And I was like, yeah, fine. I'm doing nothing else. So why not? So we did that. And it was my baby, like the menu, the graphics, the design, even the layering, how to make a burger was on me, right?
Did you have YouTube videos that you were watching?
No, I was doing it because we went to London tracking around all these burger joints and Birmingham as well.
Great bit of market research.
Absolutely, yeah. I put on a few pounds doing that. So we did that. And we're only, the shop's still open now, but after about 2 to 3 years, with the overlap of doing the mortgage brokering, it just didn't make sense. I used to be in the burger restaurant, then sat on my laptop doing deals for finance, and it was like something's got to give. And actually,
Yeah.
this burger restaurant isn't serving the purpose anymore.
But was it profitable? Was it?
Profitable, award winning.
No way.
I enjoyed it. I probably wouldn't work in food again. Like I say, I'm an ideas person, so I'm happy to like set something up. Give you the design, graphics, you crack on and do what
What
you
was
want
it that
with
you
it.
didn't like about it, about the food business?
I think it's what didn't I like? First of all, people are never happy, right? But what killed it really was deliveries. Once you started doing deliveries, you deliver a burger, it's just not the same. It's soggy.
Food doesn't travel well in general.
And so when people are not happy with their deliveries, it's like, well, it's been on the road for 30 minutes. What do you expect? So I couldn't.
Exactly.
The quality aspect for me wasn't great.
Yeah, no, I know a lot of, especially through COVID, a lot of restaurateurs, and they all had to go down the delivery route
Yeah.
to survive, and all of them were really disappointed with it. Not only did you have to take a massive cut as well because you've got to give it to the delivery people, but the quality of the food just isn't the same as restaurant takeaway, maybe, but it's a whole different ball game.
It
with
is.
the food,
And
beverage,
when you're
hospitality business.
trying to pitch yourself as gourmet deliveries,
Yeah.
and then what happened was when the restrictions started easing, because people had been used to deliveries, the in-store kind of trade
took a
just
hit.
wasn't there. So I felt as if it wasn't serving me. I could be better doing other things, and I was, because I was suddenly doing this mortgages and flying really.
Absolutely, yeah. You're
Yeah.
doing very well at the property finance stuff. So that's how you got into the industry. Have you ever thought about doing other things within the industry? Like, investment is something that I always think that is kind of like all related professions within property, kind of like a gateway drug almost to
Yeah.
becoming an investor or developer or something
Yeah.
like that.
So I've dabbled with property investment, small scale stuff in Wales, and again I haven't enjoyed it purely because once with the two rentals that we had, it's like I didn't like dealing with the managing agent or the tenants, and actually from a cash flow perspective, it just wasn't cash flowing as much as it could or other things would. So I probably wouldn't do that. What I'm interested in is businesses. So the ideas I'm looking at, and this, by the way, is a very good setup. Anyone watching, one of the best I've been to, right? Is there's a lack of this kind of setup in the Midlands.
Right.
So I've been on a lot of podcasts. Yeah, I'm on a lot of podcasts.
Yeah, I've noticed. Yeah.
And pre-COVID, mostly it was on Zoom. Happy days, do it in your office.
Yeah, of course.
Virtual background, blurred up or whatever in Zoom. But nowadays, everyone wants to do it in person, which I understand. You get a lot better content.
Absolutely.
Yeah. However, everyone's in London. These studios are all in London. So for me, that's like a 4-hour back and forth journey, 2 hours of my time. The cost, the expenses are whatever, but it's more the time away from the office. 2 hours getting to London is a lot harder than getting 2 hours to Birmingham as well. It feels different.
Yeah.
So there's a gap in the market for these studios in Birmingham, which I'm looking at maybe setting up, and also technology as well. So this is all just weird stuff. We wouldn't expect you to ask this, but looking at setting up a platform where you can have business owners connecting up with videographers and content creators to ad hoc, do some sort of stuff together.
Interesting. So, I mean, it sounds like you very much have a business mind primarily, and that's kind
Ideas, I'd say.
Ideas.
Yeah,
So you kind of the concept. Have you ever done Wealth Dynamics?
I have. Yeah, I cannot remember what it was though.
Oh, come on, Shaz.
This was when I was my first company at Mortgage Broker. I can't even remember. Yeah.
All right, well, you'll have to come back and
I'll
tell
have
us
to do
later,
another
and
one,
we'll let everyone know. Okay, so then the property finance stuff, though, as well. What is it about the property finance? What area of property finance do you specialize in?
So I work specifically with property investors. So that's unregulated, buy-to-let, HMO, service accommodation, bridging, development. If it's a house you're going to live in, I don't do that. Which is funny because when I was at Barclays, that's all I did, right? But I don't do it anymore. It's working with investors, helping them grow their portfolios. That's my bag.
So if somebody came to you and said, "Hey, I want to buy this 3-bedroom house," what would you do? What would you say?
What, to live in?
Yeah.
Yeah, I'd say, look, I'll recommend you to someone else and
Okay.
kind of manage you through that transition. So I wouldn't just palm you off, but...
Yeah, but you just absolutely 100% totally focus on investors.
Yeah, you know what it is I don't want to get distracted. I think generally with the regulated business, so residential mortgages, there's a lot more compliance. Happy to be compliant, but if I can avoid it and do other business, then I'd rather do other business. And in terms of distractions, like I often get accountants or solicitors saying, Shaz, if you refer us business, we'll give you a referral fee and all this sort of stuff. And I just don't want the distractions of having those other forks. I'd rather just focus on the one niche and just do it really well.
Yeah, I think sometimes I've come to the idea. Well, spreading yourself too thin, trying to do too many
Yeah.
things, it's usually frowned upon by a lot of people that are like very high performance. They always say like focus down on one thing, do that really well, and then once that's established, then you can kind of go off and do other things. And I guess that's the approach that
For
you're
now.
taking.
For now. Yeah, yeah.
And what aspect of being a broker do you enjoy doing the most?
Good question. There's a lot of things I enjoy. I think, like I say, I definitely consider a big part of what I do sales. The lead generation is sales. No matter, I know there's a lot of brokers like, oh no, it's what the customer wants and their journey. Yeah, great, but you got to get the sale in first of all. So I enjoy meeting people, networking, going to events, speaking at events, podcasting, this sort of stuff. As kind of people who've known me the longest before this whole property thing, they know me as this shy, awkward, kind of anxious person. And when we do meet up, they're like, "Oh, we could never imagine you doing what you do now." But I enjoy it because it is meeting different people who kind of elevate me to think different things.
Sure.
Um, and then obviously the feedback you get from doing a good job, the word of mouth. So when people email me or call me and say, "We've heard about you from so and so," they said great things. That makes you get that little endorphin
Yeah,
rush. So
yeah,
that
yeah.
makes me feel good. Definitely enjoy that. I think the other thing is I really care about what's going on. So I'd rather have a smaller client bank and I know everything about them, and actually I care about their business growing versus having loads of clients where I'm just churning business.
Yeah, yeah,
So
yeah.
keeping that quite compact and actually giving, to shits really is a big thing for me as well.
What's the what do you like the least about being a broker?
What do I like the least?
Or what's the worst aspect in
I
your
think
opinion?
a lot of it, and this isn't to complain, it's just a lot of the uncontrollables. So I'm really responsive. You could message me now and I'll reply within seconds. Like I'm really proud of the fact that I'm responsive as. However, if then the third parties like solicitors, lenders, accountants, valuers, if there's slowdown in the market outside of my control, as you know probably,
Very much so.
then
Frustratingly so.
yeah, and it slows everything down. So all I'm gonna is the things I just can't control.
Yeah, I think that's a good way of putting it. Actually, I mean, and so from a week to week basis, kind of break down. What does your week look like in terms of because obviously there's so many different elements to being a finance broker. So break down a week for us. What does that look like?
So average week. Good question. Okay, so I actually have an office because I do some work every now and then. Right.
Believe it or not.
Yeah. So in the office, it's myself and my admin Joe. So we're office based, and I've got two other admin who are outsourced and remote. So I'll be in the office most days, like 5 days a week. I normally get there 8 o'clock because it's so close to my house. Between 8 and 9, like I said off camera, I get so much work done just because there's no one calling me or bugging me. I get loads of work done, and I probably leave at 3, half 3. So I leave the office fairly early, but that's because everything's done. And then Joe manages the rest. Typically, obviously, new emails come in, new inquiries, look at them, service them, find the best lender, best deal, get back to people. And it's weird, Sam, because some of the complaints I hear from investors about other brokers is they're slow to respond, or they're ghosting me, or not getting back to me in time. And I just don't understand why that is. Like, I don't get why people can't be responsive or set expectations. Like, so if someone emails me now, if someone emailed me yesterday, because I've been in London 2 days, right? I would email back and say, thank you, but I'll get back to you by Monday because I'm just out of the office. So even that expectation setting, I don't understand why it's common decency, isn't it?
I think so. I think that the main reason is that they're either disorganized, which is kind of on them, or they are genuinely buried in the work. And so I've kind of had it with one particular lender recently where they
Name and shame. Don't just say one lender.
I don't want to do that. I feel bad. Well, oh no, I don't want to do it.
Okay,
I
fine.
don't know. Shame. I'll tell you afterwards.
Fine.
No, because you know what, as well, because I'm a business owner as well, it's like leaving a Google review that can stay there forever. And then, especially it's my industry, I'm a little bit protective as well. I want to give the chance to people to get out.
Fine.
It's not, they haven't totally shafted. They're just basically, they had really good response rates. And suddenly it just went down significantly. And it was so noticeable. So I don't want to kind of throw them under the bus and
You're too nice. You're too nice.
And I want to give them a chance to, because I know what it's like to build a business. I built built
Yeah.
businesses from here to Hong Kong, and it's really, really difficult. And so if you're doing something really, really well, and then you have a hiccup along the way, I think you have to have a chance to dig yourself out that hole.
Yeah.
And sometimes it's not necessarily your fault entirely as the business owner or as the team around it, because in my opinion, with this lender, for example, as everybody's putting their rates up, they managed to keep their rates down because they had lower
Yeah.
cost of capital. And so they became really, really popular really quickly. And if suddenly you've got, I mean, we know about what happened through COVID, right? There were all response times from all lenders have just been, I think you posted something about it recently.
And I'll name lenders only because it's factual. So just to give you an example, like Shawbrook Bank, for example,
Yeah.
at one point, I think around Trustonomics when everything was going up and down, their service levels were 21 working days, right? So to put that into perspective, that's like you paying your fees now, getting the case in, and then me as your broker saying, I'm not going to speak to you now for another month.
Yeah.
And that isn't acceptable at any point, right? But they're doing better now. So this isn't throwing them under the bus. It's just giving context that's out of my control. Do you know what I mean? Like,
Do you personally know the CEO of Shawbrook Bank?
no. Do you?
No, I don't mind doing it. But I don't know, like the Tesco's guy or whatever.
Yeah,
but
yeah.
I know these other guys, and
Yeah.
it's like I
Oh,
feel
okay,
like
fine,
it's kind
fine.
of like it would ruin our dinners together.
Yeah.
So,
Love you, Shawbrook.
yeah, exactly. No, you know what? No, absolutely credit where credit's due always, and I think constructive criticism is completely the right way to go about it.
Yeah.
And you know what? The thing is, like, if I was to go down the route of your Barclays and your NatWest or your Lloyds and some of these other high street banks that we've worked with in the past, I mean, I'll say Handelsbanken, for example, they just take forever to get anything done.
Yeah.
But I mean, to a certain extent, I'm kind of happy with them because they do manage your expectation. They do tell you from the outset it's going to take 6 months to get this through, and we're going to send everything by snail mail. So it's kind of like, so I guess that from that point of view, it's all right because as long as your expectations are managed, then you can manage the expectations of the borrower, and so then you don't have the phone going off and you don't feel like nervous and stressed out that this thing's taking a lot longer. Because if you do care about the clients as you do,
I care too much. Because I want, for me, it's like I want to sleep at night knowing that everything's sorted and there's nothing hanging over me that needs to be done. Because at the end of the day, we're helping people buy houses. Do you know what I mean? Someone's gonna live in that house, and so it doesn't matter about egos in the middle or anything else. How much commission am I gonna get? All this stuff. It does not matter. It's about the house that's being bought.
It's about the end result.
Yeah, of course it is.
And I always have this motto that everybody goes home with a smile. So as long as the lender's happy with their deal, as long as the solicitors are happy with the deal that they got, and of course the borrower's happy with their deal, everybody's happy.
Yeah.
Then you know what? The money comes as a byproduct.
Yeah.
And then the repeat business comes as well, which is how everybody grows.
Absolutely. I mean, the way I look as well, just to add on to this point as well, is like, if you get any bad news, if I get bad news from a lender saying we can't lend because of X, Y, and Z, or we need this and that, my kind of personal rule is it reasonable? Can I explain it to the client in a way that makes sense? And if it was me, how would I feel? And if
That's really good, actually.
and if any of those factors aren't met, then I know it's kind of more back. It's pushed back to the lender again. Being reasonable, I think, is key.
Yeah, absolutely. Tell us a time that you felt that a lender gave you an unreasonable reason.
So unreasonable reason. Let me think of this now. Really good question, actually. So I'm going to name the lender as well. No. So
I tell you what, if I name the first one, would you?
No, I'll name lenders. Okay, cool. So this was, I believe it was either Octane Capital or it was Lender. It was one or the other. But what they were doing is so short-term finance, bridging development, right? Client was using investor finance, so he's got investors on board. And right, so yeah, it was LendHub. The client already had loans with Octane, so Octane had like the charges and security on the company. What lender was saying is we want a deed of subordination from Octane to say that they're not going to have a debenture on our new property. Octane was saying, well, no, we don't want to do that. The client's in the middle going, look, I just want it sorted. This is adding to my legal costs and actually want to complete this loan. And I was like, make it make sense. Now, realistically, let's just say Octane. I mean, I've said it now, Octane. They should agree to that because if not, they're getting more security than they had initially, right?
Yeah.
But they were pushing back saying, no, we're not going to change our position. In fact, we'll do the deal and lend on it instead, but we don't want to do that. And it's like, how do I explain that to the client? Do you know what I mean? So in the end, it got resolved because I was like, guys, come on, like
So they did allow it in
they
the
did
end.
allow it in the end. So it's just ego, isn't it?
Yeah.
Yeah.
No, you know what? It's and I'll probably trying to edge in and steal the business.
Yeah.
Basically, the fact that they said we'll do this deal is probably thinking, well, why didn't we get a chance to do
It's
this deal?
because they've done 4 already for the client, and this 5th one, he's going somewhere else. So yeah, of course, it's probably like, well, why isn't he going with us?
Yeah.
Will be difficult for no
So
reason.
I think that one it was good that you fought back, because I think if you didn't then and went somewhere else completely, it would have been a bit of a shambles. But I think that's the sign of a good broker is that you don't necessarily give up. You can kind of decipher the code and then push back where necessary.
I mean, look, obviously, when that email comes in, you have a 5 minutes of panic, then you calm down, then you regroup, and then you deliver the information.
Yeah, I've been there. I mean, recently, since the mini budget,
Yeah.
I've been finding term loan lenders, for example, very, very slow, and also changing policy
Yes.
regularly,
Mm-hmm.
and therefore something that was agreed. I've got one lady in mind, bless her. I think she's done such a great job. It's been dragged out. I think we've been to about over 4 lenders at different stages from the very beginning, and we're really at the end of it now. But
Yeah.
it's been horrible. Have you experienced the same thing? And you've been through so many cycles in doing this. Every time that there's some sort of major announcement or something in the marketplace, do you experience the same thing that term loan lenders do? This sort of thing?
Lenders obviously restrict their appetite in one way or the other. So whether they increase their rates, tighten them on policy, or ask 10 more questions that they normally wouldn't, it happens when things change. Things I'm seeing now, I'm not sure if you see the same, is a lot more lenders getting very, very tight on source of funds. So yeah, you've got the deposit. Where's that money come from? I had a savings payout 6 years ago. Okay, we want to see 6 years worth of bank statements, which makes sense, but they weren't asking that before.
Yeah.
So I'm seeing a lot more of that now.
But is that that's an AML thing, right?
It's an AML thing, but in my personal opinion, solicitors will check that anyway. So there's no need to do double dipping on underwriting, I think.
Yeah. No, I've got one particular lender that always does that. It's always asking stuff that the solicitor's going to get anyway. So I was like, why?
But then there's other lenders, and this is, I'll name them because it's a good news thing. So Lend Invest, right? I would say they are probably the most common sense approach lender in the specialist market. In terms of the underwriting, they only ask for the portfolio schedule, proof of income if it's like a first-time landlord, and that's it. Because they push everything that's going to be done by the solicitors, they just push it to the solicitors.
Yeah, and then if they want that stuff, they just ask the solicitor to send it over.
Exactly.
And that's and that's the way I've done it since we've been a lender. For the most part, anything that we've needed, trying to streamline the whole process.
Honestly, I don't know what you feel. I mean, I personally feel a lot of these short-term lenders, the amount of questions they ask for like a 9-month loan. I understand it's not my money, so it's easy for me to say, right? But the amount of security and risk and security they want, the risk aversion, and the hoops they make people jump through for a short-term loan, sometimes I think it's a bit onerous.
Sometimes I think as well, if I was to look into the ones that are good and the ones that aren't, some of them are. Is it risk averse or is it inexperienced or is it a combination of both?
And it depends on the funding line as well. I think so. If it's their own money, they're definitely different to people when it's institutional finance. I've noticed there's a difference there as well.
Yeah, absolutely. One other question, this is becoming a bit of a therapy session for brokers, I think.
Yeah.
One other question that I've got, which I know you've got an opinion on, but I'd like
got an opinion on everything, Sam.
Yeah, no, it's good. It's good. That's why we like you. Admin fees to be paid to brokers.
Yes.
What's your opinion on that? Should a borrower pay an admin fee?
So broker fees. Okay, so I mean, just for context for your viewers and listeners, even if you get charged a broker fee or you don't, lenders will always pay a procuration fee on the back end anyway. So brokers get paid regardless. But I think the broker fee, I charge a broker fee.
I charge a broker fee.
Good. And there's some brokers who don't, which is absolutely fine. However, I would potentially argue that potentially they are then either churning business because they were in 3 months to get paid, if that. They potentially might be more inclined to give you deals where they get a higher procuration fee because they want more money. And thirdly, you as a broker, you want to value your time and your effort. Otherwise, you might get more people coming to you just to check. You're putting all the effort and the work in not taking any money up front, and they just down valuation, change their mind. They've not disclosed, the client's not disclosed something, which they should have. Deal's gonna go ahead. You've done 4 weeks worth of work for nothing. So yeah, I think broker fees have their place. What I don't agree with sometimes is, so what I don't do, I'll talk about myself rather than other brokers. So what I don't do is I don't change my fees depending on the size of the loan. So whether if someone's borrowing 50 grand or, well, if they're borrowing 5 million, I won't charge you a fee, just to be clear. But if they're borrowing 50 grand or 500K, the fee's the same because the work is pretty much the same. And what I also don't personally do is percentage-based fees, because for me, again, it's not a scalable thing. The fee is a fixed fee, not relating to a percentage.
So you do, yeah. I mean, I'm totally on board with you. I think the main thing for me is that the way that a broker gets paid is effectively upon completion. That's the way the majority of the cash comes in anyway. So if you're waiting 3, 4, 5, 6 months in some cases, especially back in the COVID days, that's a long time to wait, and a lot of things can happen in that.
They're trying to run a business, so like your
You need
pipeline needs to be.
Yeah, exactly. And if if it's for some reason the borrower decides that I just I don't want to buy this property anymore, or the seller pulls out or something, unfortunately you've done all that work, and if you've committed to, let's say, 10 of these people, and that's taken up your whole month, and that happens 10 times, probably doesn't happen that way, but imagine if it averages out over, you end up working and paddling very hard for very little.
I agree.
So I think it's a small commitment for and what you can provide on. I think what brokers can provide by charging that fee is a little bit better service, because then you're less like heart palpitation. Is this deal going to happen or not? Should I just get one more client just to be able to put them in the pipeline so they work on the conversion rates?
I mean, I'll give you an example. I had a WhatsApp earlier, so because some investors are very short-sighted. So I had a WhatsApp message at 7 a.m. Hey Shaz, heard lots about you. I've got this massive portfolio. I've got 2 refinances. What are your fees, and when can we have a chat? Oh no, can I give you a call in 15 minutes? This is 7 o'clock in the morning, by the way. So I said, look, obviously in terms of phone calls, I'd love to pre-book a call. We'll sort that out. These are my fees. And then he replies, okay, yeah, sure, happy to book a call in. Let me know when you're free. In terms of fees, can you do it for free, please? Because there's lots of business on the table here. And I said, no, I don't work with free, thanks. Now, the point I'm trying to make is, I could do it for free, but if you went to a fee-free broker, there's loads out there, so Habito, Trussell, those kind of online fee-free brokers, lnc.co.uk as well, worth every penny. Like, are they going to reply to your WhatsApp message at 7:30 in the morning?
Definitely not.
Do you know what I mean? There's things like that, and people sometimes have their blinkers on, trying to save a bit of money. And I had another WhatsApp exchange. This rarely happens, this thing about fees now, because I've got a bit of a reputation, touch wood. But yesterday, this guy Bobby, Bobby's a very anonymous name, Bobby.
All right.
Hey Shaz, long time no speak. Yes, Bobby, how's it going? Great. Okay, cool. I've got some refinances coming up. What are your fees? And you know what? When the first question is fees, you know where it's going. Yeah. What are your fees? Yes, Bobby. My fee is £600 for your first deal. £400 thereafter. That's my fees, right? He goes, great. That sounds good. Any discount for the first one? And I said, no, there's discount for loyalty. And he did like a laughing reaction on it. So goodbye, Bobby.
See you, Bobby.
Yeah.
No, I just think that you get what you pay for, and if you get a good service, you get quality. I think, and we're talking not hundreds of pounds here. In the grand scheme of things, these investors are making, hopefully, 5-6 figure sums, and so a small token just to put some money in the till
incentivizes you, and also it makes you accountable, because once you've paid me the fee, if suddenly I become slack or non-responsive or ghost you, it's like, Shaz, I've paid your fee. You've agreed to work for me. It's a positioning.
I think it's totally a game changer. For me, I feel totally obliged to make sure that people get it.
Have you ever done no fees as a model in general? Well, I wouldn't charge a fee, but if it was an extremely large deal, I probably wouldn't charge a fee. But generally, I've never done no fees.
No, I have a very strict rule. I think if they can't invest in me, then why should I invest in them?
Absolutely.
I just don't.
Regular clients?
Pardon?
Regular clients, would you do anything for them?
I've given discounts to regular clients for loyalty. Again, that's a nice thing to do. I've not charged them like to start the work, because usually I've got that rule as well. Like, I've done all this work, it's all on a plate for you.
Yeah.
Right, we need to go to the application, because I charge upon application.
Yeah.
But I normally just like, right, I'm going to wait for you to show commitment and you're ready to go, and then we'll do it. But for regular clients, I'll just like, look, let's just roll on. Let's get
I
this done.
freestyle. Regular clients kind of just freestyle.
Yeah, exactly.
Because you got that trust, and
exactly.
essentially you are the finance department of their property business, and that's how it should be.
But I think generally, like, I've got this fantastic client. One of my favorites. They've just done this whole development, and it's a wicked, really designer apart hotel scheme.
Nice.
And they're like, you come and stay with us for free and stuff. And I'm like, no.
Yeah.
I don't mind if you give me a discount or something, but real friends pay.
Business, yeah.
Yeah, exactly. It's like, come on, you've worked your ass off to get this thing sorted. Let me come and put some cash in the till. Let's get it going. Let's get it.
Real friends pay, and also they document it on social media. They tell everyone else about it.
Exactly.
Do you know what I mean? There's a lack of that.
And I think that's really important when it comes to business relationship. And it's almost using it as a filter to determine the ones that are going to be the people that really like the prima donnas and the ones that's going to break your head. And the ones even that pay sometimes break your head anyway. So it may as well get some money in the till. But the ones that don't, they're just looking for a free ride. And the chances are, we always say that we're very relationship driven. Chances are there's no relationship, there's no connection, and they'll jump from one broker to the next and they'll be shopping around left, right and center. It's just like, no.
With regards to shopping around, so again, a lot of this rarely happens now, which I'm grateful for because it's less fluff in my inbox. But anytime someone even mentions or lets slip that they've got other brokers working on the same deal, I'm always like, okay, cool, I'll take a step back. There's no point having two brokers on board. What's your...
I totally agree. I think if somebody else has gone to... If they're unhappy with their broker...
Then it's different.
If they...
Okay, what if it's a case of, hey, Sam, my other broker, Shaz, has given me this deal. Do you mind having a look at it and see if you can beat the deal or beat the rate?
If I know the other broker, I'll usually step away because it's like... What's the point?
Yeah.
It's like I'm not here to shark other people's, business. But if I don't know them and they say, Sam, I'll say, send me the terms that you've got and I'll try and match or beat them. But I need full transparency on what you've got.
In terms of brokers and client relationships, I'd like to know your thoughts, Sam. It's interviewing you. Some brokers, and I've done a post on this a while ago. Some brokers, they'll give out the terms, whether it's short-term bridging or mortgages, and hide the names of lenders, just because they don't trust that the client's not going to go direct or go to another broker and take that deal elsewhere.
Yeah.
I think that sets a very bad precedent on day one. Because if you don't trust that client enough that they're not going to go elsewhere, then that trust isn't there from day one. Do you know what I mean?
So it's not that they're going to go elsewhere.
Or go direct, or cut you out somehow.
So basically, if I was doing it with friends and family, but at the end of the day, we are dealing with the public, and some of these become like friends. That's great, but again, like growing up, I've just turned 40. I know that you can count your real, true friends on one hand. People that are going to drop everything and come and rescue you from hospital or whatever when you really need them, right? You can't call some of those clients for that kind of relationship. Now, I'm not saying that for that reason we can't trust those people. But what I'm saying is. I'm running a business and there's a system and a process. And that system and a process is that I'm going to do all this is the way we work anyway.
It's good.
We do all the work on our time, our dime initially. We send you the options. And then if you want to pick one of these options, it doesn't matter what the name is anyway. It's like I'm telling you, this is a big institutional player, this is a challenger bank, this is a private lender. It doesn't really matter what the name is. Look at the numbers. I'm telling you kind of based on what the leverage is, what the pricing is. This has this pros and cons. That one has that. Which one do you fancy taking? And then once you put the application fee on account, then we kind of disclose the name and then we go for it. And if they're not comfortable with that, then I'm okay with that as well. It's like, look, I've got plenty of people that are and understand why we work in that way. Yeah. And I think the bottom line is because mainly the stuff that I do as well is bridging, development, exit. Very investor developer focused. A lot of those names you can actually go directly to the lender. Yeah. So a lot of we've got over 250 different lenders that we can work with, from high net worth institutions, family offices. If I start just giving out those names, that's our intel basically. I
suppose that's the value that you've actually
So over the years I've kind of built that book, and I don't want to just suddenly give out those names to everybody on every single set of terms, because a lot of the terms that we send out don't necessarily go anywhere. So if I'm just giving them away for free, then it kind of takes away a little bit of
Interesting.
the intellectual property that we have.
I love that. No, that's actually the best answer I've had to that. So yeah.
Okay,
Thanks.
fair enough. Okay, so how does a borrower get the best rate?
They trust their broker first of all. I think it's a two-way thing. First of all, tell your broker everything. The weird, the wonderful, the stuff you don't think is relevant, tell them that first. Yeah. So that that CCJ you think isn't important, tell them that what's happened. Send them all the information, credit files. Send them your proof of funds. Where's that money come from? Is it an investor? Send them everything, and then tell them what you're doing now and what your plan is in the future, and then let them work it out. Now, obviously, it's different short-term versus term lending. On short-term lending, the most important thing is the exit strategy. How are you going to pay this off? How are you going to come off this bridging loan? But I think for me, it's full disclosure. Full disclosure. So, who's going to do the work? What's your schedule of works looking like? Where's that money coming from? How long's the project going to take? What's your assets and liabilities position? I find a lot of the new borrowers don't understand it because they're like, why is my rate 0.9%? I've seen someone else get 0.7. It's like, yeah, but you don't own your house. You have no other assets, no experience. You're more of a risk to the lender. They're going to charge you more.
Yeah, exactly.
Things like that. And with term lending, similar things, you're looking to purchase or refinance, it's source of funds, sales listings. But again, some people don't realize, or maybe they need the kind of nudge sometimes. What is unusual about the situation? So is there any reason you wouldn't get a mortgage? Is there any reason this property isn't going to get a mortgage? Those are the things I want to know, because everything else is pretty generic, right?
Yeah, exactly. It's like, do you have any adverse credit in the background? Do you have any?
Is the property on a mine shaft? In Wales. In Wales,
Yeah.
Japanese not we do mine shafts everywhere. But
Is that right?
yeah.
A lot of mine shafts.
Because of coal mining, yeah.
Ah,
In the valleys, yeah. But yeah, those unusual things. If you
good
might
to
think
know
it's
that.
normal, but tell the broker all of that. Is the property above commercial? Is it near some investors don't class commercial as commercial. They might say, yeah, it's not really commercial. It's just a working man's club. Yeah, it's basically a pub. And suddenly that changes lending appetite.
Yeah, exactly. And this is the the question of how to get the best rate
Yeah.
is exactly.
And sorry, best is subjective as well.
Yeah.
So the way I look at it is there's two variables really. First of all, you determine what you want. Do you want to try like a variable rate, tracker or something? Do you want a 2-year fixed rate or a 5-year fixed rate? Those are the kind of three spokes, first of all. So again, some people, especially right now, give me all the options. I'll do that, but I'm not really doing my job very well because they're so different. A 5-year fixed is stability for half a decade versus a variable, which is going to go up and down in that period. So actually, they're two very different things.
Yeah.
But anyway, you want all the options, so you got that. You narrow it down. Okay, I want a 5-year fixed. Within that, I think the two most important things are: do you want the lowest cost month to month, or do you want the lowest cost over the 5 years? So lowest cost month to month is the lowest interest rate, irrespective of what the fee is going to be. Lowest cost over the 5 years might have a higher rate, but you might have lower fees, you might have a free valuation, you might have cash back. So actually, over the 5 years, you end up paying less back. And then it's a choice to make best. And so it's best whatever in your kind of perception.
It's I say subjective. It just depends on what you feel is the best and what you can qualify for. Because, like you said, if you've got adverse credit or adverse media, you might not be able to get a loan at all.
In this country, like I've said this a few times now, it's so easy to get a CCJ. If you get a parking ticket, just pay the parking ticket. For God's sake, 60 quid, just pay it.
Yeah, no, I totally agree. You know what, as well, it wasn't until I really got heavily involved into property finance, be it about 7 years ago, that I realized how important the credit score was.
Yeah.
And fortunately, my credit score has been exemplary the whole last 20 something years. But I see some really bad credit. I mean, some of them are pretty extreme. Like, husband died. We had some financial difficulties, so we missed a few payments here and there. Some of them a little bit unlucky that they missed a parking fine or something, and they didn't get it, and then they just got the CCJ.
Yeah,
They didn't
and
even know about it.
like in South Wales, Welsh Water are notorious where they send the letters to old addresses or rental properties where landlords who are investing remotely just don't check them, and they slap people on with defaults and arrears, and it's notorious, and they're so notorious for doing that where lenders can actually now agree. They're like, if it's Welsh Water,
Oh, really?
as long as we can see some correspondence, we'll just be okay with it.
Oh, that's crazy. Okay, that's become a thing.
Yeah, it's a thing.
This episode is sponsored by the PLMD Group. PLMD Group is made up of the PLMD Development, PLMD Estate Management, and PLMD Capital, providing expertise in real estate development combined with asset management. With more than 70 build-to-rent properties and £20 million of assets under management, PLMD's extensive knowledge of local planning policies have resulted in a strong track record, turning liabilities into valuable assets. The group delivers value through a fusion of experience, innovative design, imagination, hands-on management, and sustainable resources. To find out more about PLMD and the services they offer, head to plmdgroup.co.uk. So, as a mortgage broker, I know that you can. There's a couple of different ways that you can get access to all the lenders,
Yeah.
etc. You can go directly authorized to the FCA, or you can go as an authorized representative. What is your understanding of these two options, and which one? What are the pros and cons of them?
So, I mean, I'll tell you, I am an authorized representative of a directly authorized network. I did try going directly authorized, but my business plan was to do non-regulated business. And the FCA came back and said, well, if you're doing non-regulated business, you don't need an FCA number. I was like, technically, that's correct. However, a lot of the term lenders need you to have an FCA number. They're like, yeah, sorry, no thanks. So that's why I went through an AR. But yeah, so if you're directly authorized, it means you have direct authorization with the FCA, and there's you, and you're authorized. You're responsible for everything, compliance. There's a thing called the Gabriel report, end of the year, which you have to kind of report back. All this sort of stuff. It's a lot of paperwork and admin, but you have to keep on top of it because
That's the DA route.
directly authorized where you're, yeah. When you are an AR, which is an appointed or authorized representative, it means another company takes on that burden or load, as it were, of compliance and all the file checks and everything. You essentially use their license. You still get your own FCA number, but you're kind of authorized through them. If there's any checks being done, they're responsible. They're in the middle. They'll take a small percentage or a monthly fee just to make that happen.
And so the reason why you went down the AR route is because
My business plan meant the FCA wouldn't give me an FCA number. They just said,
really.
it was weird, honestly. They were like, how many regulated cases have you done? Do you think you're going to do? I said, well, I haven't really done any. And that my business plan is to not do any at all. I work with investors.
Right.
And they said, well, then you don't need, I mean, they're correct, technically. Don't need an FCA number. But like you say, a lot of these term lenders need you to have one.
And so they won't even just give you one anyway?
Nope.
You've got to like be writing some business to be able to get it.
Yeah. And I spoke to our compliance lady yesterday. I said, look, Elizabeth, her name is. I said, like, do I need to do any to have my FCA as an AR? She said, yeah, you should probably do one every quarter just to keep on the system. The only, from a investor client perspective, things to look out for. Okay, fine. Things to ask your broker before you actually take on a broker, right? Is people always say, do you have access to a lot of lenders? It doesn't really matter, Sam. Like, my opinion.
What is that? Whole of the market.
Yeah, are you whole of market? It doesn't. It means nothing.
Why do you say that? Because you just said, for example, that if you don't have a FCA number, you don't have access to some of those lenders.
So let me contextualize that a little bit. Okay, so what I mean is, right, I think what's more important is the niche the broker operates in and what they do on a day-to-day level. So, for example, I'm trying to think of a good example. Okay, fine. So if, let's say I wanted to specialize and only wanted to do social housing mortgages, right? And there's probably like 5 or 6 lenders who do that.
Sure.
That's all I want to do. So is it important that I have access to 90 lenders when I only need 6? Right. What's more important to ask a broker is, as an investor, hey, Sam, this is my business plan as an investor. I've got 3 properties, all lent to social housing leases. I want to get 3 more in the next 6 months. How many social housing mortgages have you done?
Right.
Do you work with those lenders? So the fact that you might say, yeah, but I've got access to Halifax as well, who cares?
Right.
I think that's more important.
So no, it's true. I think that's the layman not understanding what they're saying is, do you have access to all the lenders for my deal?
For my situation.
Yeah, for my situation, and
because what you'll find is estate agencies, right? So if you go to any local corner shop, corner estate agency or local one, they'll have their brokers at the back. Now, go to them for a residential mortgage, they're on it because that's all they do every day. Go to them for anything unusual. And unusual means anything like it's a limited company, buy to let and beyond. They one, probably won't understand too much, and secondly, they won't have access to the range of lenders they need who are off of the high street. So they might be limited, but it's not asking who they have access to or what. It's this is what I'm going to be doing. Have you done this before? So same with bridging. A lot of brokers don't understand bridging, which is fine. It's just they don't see it. But you need to ask them, I'm going to be doing short-term bridging finance. Have you done that before? Do you do that yourself? Do you hand it off to a packager? Packagers charge extortionate fees.
Yeah.
So it's more around asking the right questions.
Asking the question in the right way.
Yeah.
It's the same kind of. I think I get it. It's like there's 200 lenders out there. Probably only 5 of them are going to be suitable for you.
Yeah.
So if you ask the question in the right way, I'll be able to give you a much more accurate
Yeah.
answer. Fair enough. That does make sense. What about if a broker does it? So I got asked this. I was doing a presentation for a group of investors and developers. They were earlier stages, put it that way.
Yeah.
And the majority of the audience, anyway. Is it important for the broker to be local to that area?
Not anymore, I don't think. As in, I'm in Wales.
Yeah.
Most of my clients are in the Midlands, and I've got some in London, some in Manchester, and of course, some in Wales. How often are you going to see your broker? Probably very rarely, unless I'm your broker and I network and I see you all the time. But yeah, very rarely. You don't need to see your broker. Everything's electronic, PDF forms, Word documents. So I would say the broker being local to you is not really that important.
So I agree overall
Okay.
on balance. The thing about the Welsh mines and then also the Welsh water,
Yes.
like me being from London and now living on the south coast, I might not have known that.
Interesting. Yeah, true.
And I think that I think on balance, these are little minutiae that don't really have a big effect.
But now you've mentioned it, I think it's interesting because again, I guess some clients will say, I'm doing a HMO conversion. It's 8 bedrooms. I need an investment valuation, and it's in this part of Manchester. Have you done anything in there to get your knowledge around valuations? So I don't think being from that area is important, but I think having maybe clients and other case studies in those areas are important.
That's probably exactly right. Yeah,
Yeah.
exactly. Having known what to get. 'Cause I mean, I'm doing stuff in the northwest as well, doing stuff across Blackpool and stuff. So, and now I went to the area because we've met valuers there as well. I literally went up there to meet with the developer and meet with the investors, and meet their valuer for the lender, because I just thought, you know what, if I really want to start to do a lot more in this area, it's going to help me.
You've got to know, yeah.
Yeah, I've got to know what's going on and how they're going to be valuing stuff on a yield basis and at what level. So yeah, I think that the local knowledge. I think that being a broker, it's a bit like being a solicitor, where you can work nationally, quite comfortably.
Listen, we're better than solicitors. Come on. We communicate.
Yeah. You know what? I probably need to get a solicitor. Do we get a solicitor?
Who's a solicitor with a person? Can you think of a solicitor with a personality? I mean,
to come on a podcast, can't think.
I can think of one. I'll introduce you after.
No, there probably is actually, but no, I've got.
And I'm joking. Solicitors aren't that bad.
No, I've got a couple as well, and we should get them on. I'm just thinking we haven't lined up any, but it'd be good to get their insight. I mean, I know he's saying a solicitor with a personality, but it's more the fact that I just sometimes think that they're so snowed under.
But the reason for that, in my opinion, is they don't charge enough for what they do, for the responsibility they take.
Don't say that.
No, but it's true.
Don't want to pay more
but it's so true, because the responsibility they take in by signing all the documents off, the number of people involved in the transaction, because you have the power planners and everything, they don't. And if they're charging 1,500 quid for like a standard limited company transaction, that's not enough. And that's why they take on too much work. They get snowed under. There's no communication. And what I'm finding is now solicitors are working to offer expiry dates rather than when the client wants to complete. But that's a very risky tactic, because that means in the last week you expect the lender solicitor as well to go back and forth and get it all done by Friday.
Yeah. And also, it's a whole different ball game with solicitors. Unfortunately, they are a law unto themselves.
And they all speak in very proper English. But I think there's a thing. There is a regulation where you have to email certain ways.
Yeah. No, they're like, I think somebody once told me, and it was a very big property mogul up in the Northeast, he said solicitors and lawyers are the smartest people on the planet. And I think that sometimes we give them a hard time. Most of the time they give us a hard time because they don't communicate. And they sometimes bring out problems but they are also protecting everybody as well.
That's it.
You know, and so I do agree. It's a bit like planners as well. I had this discussion with another investor And we were talking about the planning system and why they take so long. It's because they aren't paid well enough. If we paid a little bit more, there might be a way of getting. But then I've got one deal, for example, right now where the fees for a multi-unit freehold block have come out at £6,000 plus VAT.
Wow.
I mean, it's just like, so are they charged? I mean, the investor nearly had a heart attack for a term loan.
However, if that deal got done within, say, 3 weeks of getting the offer out versus paying half that and taking double the time, it's
Well, there is something to be said about that as well, because the time is money, and so yes, being on a bridge for an extra month is going to have its own cost. So it kind of one balances out the other. And I just generally think, and I've been speaking to more and more people about how can we speed up property transactions in the UK. I think like literally we're on the 21st century now.
Yeah.
It's 2025 nearly, and we need to start getting a little bit faster in the way we transact, because it slows everything down. I just came back from Dubai,
yeah.
where everything's super slick and everything's super fast. I lived in Hong Kong for a while, and a lot of things were pretty rapid and pretty slick, very futuristic. And I think sometimes in this country, because we were so old in terms of our heritage and history, and
Yeah, it's a lot of archaic processes, like land registry, for example. I know they're making it digital, but still very archaic and very slow.
Absolutely. So, being a business owner yourself now, what's the biggest difference between working for yourself and working for others?
So I mean, I think the biggest thing is control, and having management of my own time and my own diary, and being responsible for other people's living as well. So employing staff is big. Like suddenly it means I'm responsible for that person's livelihood, their kids' welfare in a way. So
Totally.
so that responsibility is a big thing for me. But I think for me, like, longer term thinking is being able to develop a brand and things like that, which I wasn't able to when I was working for someone else.
Yeah, no, fair enough. I mean, I totally agree. I think that the responsibility of having other people that rely upon you is very, very, it shouldn't be taken lightly.
But I don't think sometimes I don't think give myself enough credit. I don't think business owners do generally, in the sense of you must be doing well enough to be able to provide for someone else and yourself.
But then the concept is that hopefully, when all is said and done, the business owner gets to take the biggest piece of the pie.
Yeah, you'd hope so.
Taking off. So hopefully you are giving yourself enough credit, otherwise you're doing it wrong.
The biggest piece of the burger. Let's just keep it relevant.
In terms of property strategy, let's go back to
Yes.
that as well. What is your favorite property strategy? What is your favorite? What is the best property strategy that's out there at the moment that you're seeing investors executing?
So listen, the answer to all your questions is it depends.
Yeah.
But no, I think if for cash flow, I think rent to service accommodation. It's not even owning the property, controlling it.
Really, you think that is the best property strategy?
For cash flow.
Yeah. Okay.
Because you can get into a deal for like £6,000 really, furnishing, contracts, and then your cash flow in between £800 to £1,000, and that's say from a £6,000 deal. Versus if you have to buy a property to do that, how many £6,000 you need to get a deposit?
So it's not even an investment in real estate; it's more setting up a property management.
Yeah,
business.
controlling the asset, I think, for cash flow. In terms of building a cash pot, there's still some good deals being done with flips. I've seen a lot of investors still doing flips now, or moving into doing flips because they want to build the cash reserves. And as long as the numbers work, there's the market there.
Yeah.
I'm enjoying that.
Even with the interest rates going up to 4.5, bank thing, are you still?
Yeah, I mean, because obviously if they're flipping, they're not keeping it on long term anyway. They're going to look for a buyer on the back end.
I'm saying is the buyer market still buoyant?
It is. I'm finding it is, especially with I find if investors put the effort in and make their flips higher spec or highish kind of spec, you get the right buyer. So you don't get the buyer who actually cares, but I say don't care, but you don't get the buyers who are affected that much by the rates going up and down because they're more sophisticated anyway. And then also you've got the zero deposit mortgages coming in now, so we are going to see more buyers coming into the market, I think, and also values going up or back up.
What is your take on 100% mortgages?
My take on it is lenders can't win, it seems, because for ages, a lot of brokers and people have been saying paying your rent should count towards some sort of history and should count towards a track record. It should help you get a mortgage, right? So when a lender's introduced that, suddenly I've seen the narrative being, well, it's a trap because you're going to fall into negative equity. Don't do this, don't do this. So it seems like lenders can't win for a start. I think it's good because it allows more people to get onto the property ladder without having to have family help or guarantors and things that could get messy if there are problems, right? The only thing is, because it's capped, the mortgage payments are capped to the rental that you're paying. You can't really stay in the same house you're in. You have to be downsizing based on the
Yeah,
calculations.
yeah, yeah.
That's one issue. And secondly, because you're not putting a deposit in, you really can't get the house you probably wanted. It's going to be a slightly
It's kind
downsized
of it's
house.
a great headline, but there's some limitations to how
Yeah.
they've offered it out to people.
But like I say, lenders can't seem to win on that. And it's very, very rare that I support lenders, but yeah.
So a few more quick fire kind of questions.
Sure.
Financing can be a crucial aspect of property investments. What advice would you give to individuals and businesses looking to secure financing for their property ventures?
I would say plan ahead and be patient. So both things go side by side. If you're looking to buy a property or properties, start a portfolio, start getting your funds together 6 months ahead of time, getting a build up of money, looking at strategies, getting your professional team in place. And when I say patience, don't just rush out and buy the first thing you see. If you look at the numbers, make sure it works and make sure it works for your goals now and also in the 5-10 year kind of time scale.
So plan ahead, I think, like start with the end in mind.
Yeah. A lot of people are just so impatient. Like they want to get that money now, and it's just like it's not going to happen now. But you got to take the first step to get to the end.
Yeah, exactly. I mean, and then I was telling people as well about their credit score. I become like totally paranoid about my
Credit
credit score.
conduct is so important. Sorry, when you say credit score, I think just for my end again, the 999 score to me is pretty irrelevant. It's the credit conduct, the zeros and the ones.
Okay.
The reason I say that is Equifax have their own way of working out that number. Experian have their own way of working out that number. Check My File work out that number differently. It's the actual zeros and ones, the credit conduct that's important. So the ones are the defaults and arrears. That's what they look at. But in the kind of buy to
But
let
that
space,
knocks the score down. So the
it
score
knocks the score down. The score is just a summary.
Is a snapshot of
Yeah.
how healthy does it
It's
look.
score's Instagrammable,
Yeah, exactly.
Yeah.
I'm very fortunate that I have an Instagrammable 999 score.
Yeah.
But you are right. It's kind of okay. Look, the score's 600. So let's go find out why
is it
this or
600?
that.
Yeah,
And
let's
then
go
sometimes
down.
if it's, as you say, Welsh water, then it's like, don't worry about it.
Yeah, well, I'll say don't worry about it. Let's see what's going on with it. Yeah.
Fair enough. Yeah, I think credit score, and then assets and liabilities statements and stuff. Putting those together.
Fill in forms. I mean, like people trying to half-ass forms sometimes. So you'll have a fact find, whether it's on a PDF or a doc or even on like an online thing. It says about your income. So let's say you're employed, I've had people try and be a bit clever or time efficient, let's call it. And instead of filling in their income information, they'll send me the payslip and say, "Well, it's on there. You can just do it yourself." I'm not gonna do it myself. Like, fill it in yourself, honestly, because it's just lazy.
The thing is, the form filling. I think I don't think anyone's favorite thing in life is to fill out a form.
But once you've done it once, and then you're gonna work with you forever.
It's worthwhile doing it properly.
Yeah.
I throw my brother under the bus here. He doesn't like filling out forms at
Right.
all, and he gets quite stressed out and angry about it with me. He's like, "Oh man, there's like another form." And I'm like, "Look, man, they're gonna give you like 400 grand."
Yeah, exactly. You're asking
It's
for
like-
£400,000 of someone else's money here.
It's
Like,
like, on this deal, we're gonna if you think if you know of a better way to get that money, I'm all
Yeah.
ears. Like, but otherwise, just fill out this form.
I've learned to be a lot more like passive sometimes, but not so reactive with my responses. I used to be like a bit of a smart ass and be like, "Okay, don't fill it out. We'll won't get the loan." I've learned to be a bit more chilled out because, yeah, empathy I think is important. So yeah, I can see forms are tedious, but sometimes I say that up front. Look, it's a bit, it's 8 pages, so I understand. Once you've done it once, do I have to do it again? And even then, they send me the pay slips and say fill it in.
Have you ever sat on the phone with somebody to go through it with them?
I've done it a few times. Yeah, it's not something I would offer out in general, but if someone needs that extra support, then yeah.
Yeah,
of course.
exactly. I think that being an investor myself, I do appreciate how difficult that wrapping your head around, sit down and do some admin, especially if that's not your favorite thing.
Yeah.
It's really difficult. So I do, again, for select people, say, look, I'm happy to just jump on a call with you because I know how important
But even
it is.
then, they've got to get the documents together, to give you the information.
Well, because then you've got to get the 3 months bank statement. You can't literally go around their house and sit them down in front of the TV, ask them for passwords, and
those days are gone.
Okay, so In your experience, what are some of the common challenges or obstacles that clients face when seeking property finance, and how do you help them overcome those challenges?
Okay, sure. So I think one of the most common things I see right now is people, and this is obviously investors, this is what they will do is try and buy problem properties that are below market value. But then once you do a bit of digging, it turns out there's a problem with the property. So it's not really below market value, it's worth what you're buying it for. So things like structural issues, subsidence, it's got a lot of damp, roof is not, so things where the lenders or the valuers will say, this is the value, but we suggest a retention, get the work done, then we'll release the money. And that's the challenge in terms of overcoming that. One is kind of just contextualizing it for the investor. This is what they're saying. This is why they're saying it, and this is what they want. And then to overcome it, if it's a full retention, it means they're not going to release any money until you get that work done. Whether you do it or the seller does it, someone has to do it, and you have to show us evidence, and maybe even get a re-inspection.
Yeah.
If it's a partial, retention, they might be happy to release the money. You either take less money from the lender, or get it done. But it's kind of making them understand this isn't the bargain they thought it was. There's a problem with it, and it's been found out. So that's definitely one of the things I see is problem properties.
Problem properties, and is even with, and that's with when they're buying it with a buy-to-let or a home loan or something like that. It's kind of where the bridging, they're kind of like the more
they should take the risk on bridging,
exactly.
But as we know, they don't always take risks on bridging either.
I found some bridging lenders are not keen on fire damage.
Yeah.
They're just like no. I was like, well,
why do you look? Any bridging lender is
not
keen on.
As long as you're buying it at the right price, and you've got an independent risk valuer. And I mean, I do understand that there's probably some unknowns and some insurance difficulties, but it's certainly not possible because the fact is there are some bridging lenders that will do it. So,
and if you can exit off of it, that's the main thing.
And you've got a good borrower who's a contractor. I recently had a case like
that. You're venting right now.
Problem properties are a very, very common challenge, especially when you're in the investor developer space. Property and finance involves assessing risks and ensuring viable investments. What factors do you consider when evaluating the feasibility of a property investment, and how do you help clients make informed decisions?
So, as you know, all investors will have their own spreadsheets and data analyzers, all looking at different things, and no two sheets are the same. But I guess from my perspective, I'm not one to tell them if it's a good investment or not. I'll be honest. I'll give them the numbers of what it would cost them to finance it, and then it's up to them to figure out if it still works for them. There are some occasions where when they give me the complexities and the quirks of the case, and I'll say, yeah, if you do this, it's going to jump by another %. If you do this, it's going to jump by another %. Is it worth it for you? And they can kind of consider it. But yeah, when I'm looking at feasibilities, really, that's not my concern in the sense of I'm not there to give investment advice. It's more about the financing side. But on short-term finance, I do get a bit more involved because it's a case of I don't want to put them on a bridge knowing they can't come off the bridge. So then it's a case of, look, Sam, your end value is X. You're going to refinance at 75%. Take away your cost of purchase. Take away your cost of works. Factor in the cost of finance. You're leaving X amount of money in. Are you okay with that? And often it's like, oh, didn't realize that. And then they reconsider the deal. So yeah, on the short-term finance, it's a case of working through the numbers backwards.
Yeah, exactly.
Yeah, on the term stuff.
You'd hope that the investors and developers themselves, they are actually able to run through all of this.
You'd think so. I think what it is, a lot of it is social media where the kind of pitches are no money down or get 100% funding. Borrow as much as you can, basically, right? But the point is, you borrow more money, you got to pay back more money. Now, in the current climate, all money back out deals are not very common. So whose money's left in? If it's yours and you're okay with it, then that's fine. But if it's a lender's money, then that's not a good deal.
And when you say lenders as well, it's like if it's a senior lender, it's a big problem. But a lot of the time that they're borrowing the money from somebody else, and it's equity.
Sam, honestly, I've had some clients, right, and I won't name these people, but like these are like £1 million deals. We get the bridging sorted or kind of semi-agreed through credit, and then they'll message me saying, "Oh, Shaz, how would the lender feel if we then took out mezzanine finance and gave a charge to another investor in the background?" So essentially, you're leveraged 100%. I'm like, okay, we could maybe get them to agree it, but what's your exit strategy? How are you going to come off this? Because you're over indebted. You've got like C-class shareholders. You've got all this going on. What's your overall exit plan? And they haven't got one. And then I can see that being a problem, maybe not for this deal, but eventually something's got to give because they've got no risk in the game themselves.
Yeah, no, that does sound fair enough. With your recent escapades online,
Escapades.
and you've been doing a great job,
Yeah, yeah,
and I follow your content as well. I think it's very, very helpful, and I know that it's very popular as well. So building an online brand as a
Yeah.
broker, why did you do it, and why Instagram as your main portal?
Oh, very good question. So, why personal branding? I think there's hundreds and thousands of mortgage brokers, all doing the same thing. So even in the same speciality as loads
Even
of
at the same at
brokers.
this table.
Even you're a broker, so there's loads of mortgage brokers, and like I say, even in the small niche that I operate in, so investors are loads in there. So the first thing is, why would someone want to work with me? So I just want to establish my own kind of space within that, my own community and network, within that space. Um, and secondly, kind of, it is to grow network. Like, we could be on the same event speaking about finance, but probably the same speech. Half the people will go to you because of how you deliver it, how you come across, and half will come to me. Well, maybe more than half, but half will come to me, yeah. And that's where I look at it. There's more than enough to go around, but you got to find your tribe, and the
I
only way
know
of
what you
doing
mean.
that is through social media because otherwise I'll be doing just deals in Wales,
Yeah,
and
yeah,
there's no
yeah,
point.
yeah, no, of course.
But it's not been easy. Obviously, I'm not. I'm honestly not that person who likes being the center of attention or in the limelight. I'm not that guy. But from a business perspective, I do understand Instagram's free advertising. Going on podcasts, it's brand awareness. You'll clip this up into like 5-6 clips. That's like a week's worth of TikTok content. So I get it. And then people who are anxious or reluctant, it's a case of get over your anxieties, get over yourself. But the advice I would give on that is at least try it once or twice. And once you've got proof of concept that it works, because it does work, you've then got the truth that it's worked, the evidence, and you just crack on and do more of it.
Yeah, absolutely. But why Instagram as well? Why
Why
not
Instagram?
TikTok?
Sorry, right.
Why not
So
LinkedIn? Why not
TikTok,
Facebook?
because I'm 37 years old. And I'm not doing this. Yeah, I'm just not doing it. I'm too old. I use TikTok, but at the moment, yeah, it's just recycled Instagram stuff. I think TikTok is difficult. One, with TikTok, the people who like follow your page, they're not your viewers. Like there's a disconnection between number of followers, number of viewers, and likes. There's that which I don't quite understand yet. Secondly, I think TikTok is the only one where you've got to intentionally create content for TikTok because of the way the platform is. The content needs to be completely different. I haven't got time to separately do different stuff. LinkedIn, I use LinkedIn more for networking with industry professionals. So I was at an event, BSLA Awards yesterday, which I didn't win. Not bitter
Who did
about
win?
it. Howard from SPF, nice guy.
Okay.
I met him recently, very nice guy. But yeah, I was at the awards yesterday. So, and again, I'm not from London. I'm very rarely in London at broker events. And I think at least 6 times people came over and said, "Hey Shaz, oh you're Shaz. We see your stuff on LinkedIn. We love it." So that's my aim with my LinkedIn. It's not to get clients. It's just to grow business kind of contacts. Facebook is for real friends. But yeah, Instagram. One, because it's visual. So I wasn't really doing videos till like August last year. I was doing loads of carousels and pretty pictures because I enjoy creating that content. I do graphic design, so that was
Oh, is
the reason.
it?
Yeah, I did that part of university studies and stuff. So because
Is
I
that what you
enjoyed
so
it.
you did go to university?
Yeah, media production.
Okay, right.
So yeah, when people say, "Do you do it yourself?" and then they'd be like, "Oh, why do you do it yourself? Get a VA." Well, because I enjoy it. It's not a chore. I actually want to do it myself. So yeah, doing the graphics, the carousels, that was really enjoyable. Instagram's a visual medium, and you could do it. Then in August, when I set up the company as well on my own, it was a case of, look, I think the next step is now to do videos. And I went on a small course as well just to brush up the skills. And yeah, I think with the videos, I struggled to do videos direct talking to camera. I couldn't think of anything worse, right? Doing conversations is fine, but doing a video in the office, talking to a camera, I just couldn't hack it in my head. But then that kind of course I had really helped. But it was a case of trying different styles and finding out what actually works for me, so I can be genuine and not feel like an imposter doing it. So I tried doing those little funny ones, 3 reasons to do this and that, and they're okay. I tried doing luxury property tours, that went well. I've tried doing day in the life of vlogs. So far, touch wood, the videos are doing okay. But
Yeah.
what I would say to people watching, unfortunately, when I'm now posting about finance tips, those posts totally tank. But when I post about, hey, look who I'm with and look who I'm with, those posts do really well.
Interesting.
Great. I love the I love the validation, but there's no value in that. Like there is a struggle there
So the ones that actually are about property finance perform less
nowadays.
overall.
Yes. Yeah.
Interesting.
Interesting, but it's a pain because I don't like. That's my business. That's what I should be known for, not hobnobbing about London all the time.
Although hobnobbing around London is fun.
Yeah, it is fun. Yeah.
How
Sometimes.
often do you come to London?
Twice a month? Not that often. It seems more because I'm everywhere, but.
And that's okay. Before we ask that question, what do you see as the future of property finance and the role of brokers within this industry?
So I'm glad you asked that question because I think there's a few conversations people are having around AI and is this going to take the role of brokers? I don't think so. I think it will help. There are a lot of these automated, semi-automated brokerages already, but what you can't replace is the relationships. So I think term lending, there is an argument to say because it's sourcing systems and cheapest and criteria, it's all factual types of information. There's an argument there that might change, right? You might get more players in there who are AI based. But when it comes to short-term lending, as you know, there's no real rate sheets, there's no sourcing, there's relationships. You can't replace that with AI. So I think AI will definitely play a factor. I think a lot of lenders are coming to this place now with kind of open banking and electronic ID and V, just to streamline things, get an offer out as quick as possible. Let the solicitors deal with getting completion. So I think that'll happen as well. Yeah, those are two things: AI and digitization of a lot of things, which should be
Technology, basically.
tech. Yeah.
Tech is coming in. You know, there are a few sourcing systems now that are available for public consumption.
So like, I think is it Prop is one of them, I believe.
Yeah, there's a brick flow.
Brickflow, yeah, they email me all the time.
Yeah. So but I do think that there's a human element to.
You need it.
Yeah, I think
Look.
the comparison website works really well with insurance and maybe your phone bill or something. Or your mobile phone package, but I think when it comes to doing investment development finance, I think
Which is, we're talking hundreds of thousands and even millions of pounds.
Yeah.
And if we cycle back to the example earlier where the lenders are squabbling over this, debentures, a sourcing system is not going to tell you that. So you
exactly.
can use your knowledge and say, by the way, this might be a cheapest deal, but bear in mind these guys are going to be paying the butt to work with.
Not for another 100 years anyway.
Yeah.
And then we won't be needed, maybe.
Yeah.
Question that I've got as well.
Of course.
Being in the same line of work as you, there are some clients, as you're building a brokerage, the way that some brokers work is that they will manage a case from start to finish, and they'll do all the case management. And then there's some that will work with a case manager or a few case managers to be able to have them hold the client's hand from application through to completion. What's the way that you work, and why do you think that's? Is it better or worse the way of working?
It's an interesting question. So I've done both, but I think all brokers or self-employed potentially go on the same journey on this. So when I first started self-employed with no admin support, I was doing my own admin for the first probably year and a half until I reached full capacity. That is really good because you get to know that client really, really, really well. You're part of the whole journey. You're involved. They speak to you every other day, twice a week, whatever. And that works really well for that relationship building, yeah? However, you will hit capacity. And then the choice is take on more clients and slow everything down, or just stop where you are and maybe, earn less money. You can do that. Or you take on admin support. So 3 choices. Then I took on admin support, but I struggled initially to get the right person. Getting a good broker or brokerage is only as good as the admin that they have behind them.
Yeah.
Because if you think about a mortgage end-to-end is what? 10 weeks, let's say. The broker is only involved for like 2 weeks, if that.
Yeah.
The rest is just the admin. So you need an admin who knows what they're doing, is efficient, but I also think personable. A lot of admin maybe don't want to be or don't want to show personality because they don't think that's
Stuck
part
behind the computer.
Yeah. But you need someone who is, and is friendly, gets stuff done. So I'm very fortunate that my admin is amazing. So she gets it done. And the feedback I get from brokers is, you guys as a team are really good. But it took a while to get there. And what I didn't want is if I'm on social media being this happy chappy and everyone's like, oh, we want to work with Shaz. And they work with Shaz, and then after 2 weeks, the service goes like that.
Yeah.
That's terrible.
It's
I didn't
great
want
they
that.
get the connection with you, but then that person in the background is an extension of you, so they have to be as good, as knowledgeable as you.
Absolutely.
Just maybe doing a slightly different role within the whole process.
So I think both work. There's no right or wrong. I think it just capacity is the issue there. But I couldn't then be doing all this stuff on the road, lead generating, sales, podcasting, networking, if I didn't have a team in the office keeping things chugging along as well. Because I'm quite conscious. Yes, I'm at loads of events. Yeah, I hear this a lot. I'm not.
All you do is party, basically.
Listen. I'm everywhere. Omnipresence is part of my social media.
Where's Shaz?
Everywhere's the answer.
Is that's where it comes from?
Yeah, I was networking a lot, and people were like, "Oh, where's Shaz? Where's Shaz?" And so I did that, and I think it's quite clever. I did that because it's not specific to finance. That is quite a generic thing. I could just use in anywhere. But what I don't want to be in a position is, let's say we're recording this podcast and I put it on social media, and then if a client's emailing me and they see an out of office and they put two and two together, I don't want that. That's like tragedy. So I am quite conscious that there needs to be someone in the office keeping things alive.
Somebody doing the work.
Yeah.
No, I've totally.
It's true though. No, it's true. And the other thing, just for any brokers listening, I think, or business people, I found one of the big downsides of personal branding is, to a point, you then become the bottleneck in your business because everyone wants to work just with you. They don't care if you've got your team or people that you trust or anything. They know you. They've seen you. They related to you and your brand, and they want to work with you. So I'm at that.
That's one of the kind of pros and cons of both ways of working.
Yeah,
that can be one of the downsides, and you got to kind of work around that.
Exactly. So
I think one of the. I mean, it's. I think that then if you, I'm of the same opinion. I'm very clear with everybody that I'm building a business here, and there's going to be more people joining, and this, that, and the other. And you have to be able to recruit people that are as good as you. So it's like, look, it's an extension of me. Just because it's not me doesn't mean that the person that you've never heard of doesn't know their onions, and they won't be able, they'll pick up the phone at any time, or whatever expectations you have from me, you can have for them as well. And so I think as long as you communicate that. Yeah.
Listen, Gary Vee says people don't actually ever work with Gary Vee. They work with his team, so.
What Gary Vee says goes.
Yeah, Uncle Gary, yeah.
Shaz, I've really enjoyed this.
Cheers,
I think it's always nice for me as well to be able to speak to another broker. Sometimes we're all in our little silos, and it's kind of, I think there's a friendly, competitive nature to the way that you approach the industry, and I think I wish more people did it as well. And hopefully, this is also a little bridge for us to connect more often. And with other brokers as well. So this is very much about property people. You're certainly a property person. You are a vital part in a lot of people's journey. In your opinion, what attributes does a person have to be a successful property person?
What attributes? They definitely have to have a personality of some sort, because they need to be able to be relatable to other people to grow a business. They need to be able to take risks. And I think you have to be able to take massive risks. I don't take massive risks. And therefore, I fall in the business owner camp. If you took massive risks, you can be an entrepreneur. But you have to be able to take some risks, right? And then also, I think delegation and being able to delegate. So business owners sometimes are very precious about every part of their business. I think it's important to know about every part of your business. Like when I was at the burger restaurant, for example, I cleaned more pots than I ever thought I would in my life, right? But I didn't ever want to be in a position where if I was given someone a bit of pressure, they turn around and say, well, you do it. Because I'll be like, yeah, because I can, I've done it. So be able to do all the roles, but actually be able to hand them off to other people who are better than you at doing that as well. So delegation, personality, and what was the other one?
Can't remember, I wasn't listening. No, it's all good. I think you're clearly somebody that we would like to have back. We're thinking about doing slightly different formats as well. We'll stay
round
close.
Tables or more people. I think it's different. Yeah.
Yeah, we will.
Sorry, it's your podcast.
No, we're literally thinking about doing something like that.
Cool.
We've been talking about it. So
cool.
It'll be good to get you back with other property investors and developers and get around and do more of this.
Cool, man.
Thank
awesome.
you so much.
Thanks for having me.